I think the market is, in effect, dealing with a whipsaw. On one side, you have the U.S. economy, which is still very solid. And whether you look at consumer sentiment levels, which are extremely high, or whether you look at average hourly earnings, the underpinnings of the U.S. economy are solid. Now, next year is probably not going to be as robust in the U.S. as 2018 was. We're looking at about 2.5%, down from 3+, but it's solid. On the other hand, the global picture is not as attractive. Global growth, by most measures, is slowing. You can see that in our own company surveys in terms of Europe and in China. And you have specific geopolitical overlays, obviously like Brexit, with new uncertainties about that, the uncertainties around Italy, and certain developing market economies and currencies. So, U.S. outlook solid, global outlook weakening, and there's the whipsaw or the tug. So I don't think that overlay is going to change in the next few weeks, and it's going to be with us for a while because the global outlook is probably going to get a bit darker rather than lighter.
I'm wondering, sorry, just mention the deals, though, which is a headline today. You know, the SAP, another multi-billion-dollar software deal, and a Diageo deal, and whether it says anything about where we are in the cycle and overall confidence levels.
The transaction market, Sarah, remains strong. And the basics of the transaction market, pretty good levels of business confidence, still low interest rates, robust credit availability, relatively high equity valuations. Those basics are in place, and as a result, M&A volumes are strong. You see that again this morning. You've seen it all year. I don't think that's going to change until there's some change in those basics, which could be, of course, an equity market correction at some point. But for the time being, and as long as you believe that these basics are going to remain in place, the M&A market is strong.
You may suggest it's about slowing global growth, but the president tweets 8 minutes ago, the prospect of presidential harassment by the Dems is causing the stock market big headaches. Roger?
Well, it remains to be seen what the new Democratic House leadership, Carl, is going to do. I personally hope they focus on laying out what a Democratic agenda would be should they, post-2020, be in a position to actually govern, which, of course, with only one House, they're not now. So I don't know how much emphasis there'll be on investigations. I'd like to see it lower rather than higher. Of course, there has to be some. But I hope the Democrats focus mostly on the future and on what they would do if they were in the, leading and an agenda to that effect, rather than flying subpoenas. But we'll see. I don't know.
All right. I mean, there's talk about the subpoena cannon today that they're loading. I mean, a couple of the issues that have come up is whether or not the White House was unfair in chasing AT&T Time Warner, or whether they were looked to punish Amazon, Post Office, for example. Are those rabbit holes worth going into, or no?
I would say no. I mean, AT&T Time Warner went to court. The court rendered a very decisive decision. In other words, it was out of the hands of the Congress and the White House. So I don't see that as particularly productive myself. And as I said, I'd like to see a positive agenda. I'm sure there'll be a focus on some investigations, and to some degree there ought to be, but I hope it isn't dominant.
So does that mean all this happy talk that we saw the day after the midterms about infrastructure spending and potentially regulation of tech firms, all the places where you could see bipartisan support, is out the window if all we're hearing now is about investigations?
Well, Sarah, that of course requires the president to decide he wants to work with the Democrats on some of those items. I mean, infrastructure to me would be a natural because the president, was a builder, and rebuilding the country would seem right up his alley, but I don't know if he'll cooperate or not. None of that will happen if he doesn't cooperate. So I'm sure Democrats are going to try to focus on things like infrastructure, protecting the Affordable Care Act and so forth. Whether they do anything in terms of legislation depends on whether President Trump decides to play ball with that or he doesn't.
At this point, after Navarro's speech about China on Friday, what is the best hope for Argentina, for the G20?
Well, I don't think there's going to be any agreement between President Trump and President Xi. I'd like to be wrong on that, but I don't think that's going to be the case. I don't think the markets expect that to be the case. At the moment, it looks to me as though the president likes the issue, thinks it's working for him, thinks a broad swath of the public agrees with him and the business community, and plans to keep pushing it, and really isn't interested in an agreement right now. That's my own assessment. I'm not privy to any special information in that regard. That's just my take on it. And if that's correct, you won't see an agreement here, and you won't see an agreement for some time because the president thinks it's working for him. And it's one of those issues on which I have to say, a lot of the business community and a lot of the public does agree with him in terms of trying to rectify certain imbalances in the U.S.-China relationship, intellectual property,
Sure.
mandated technology transfer, and so forth.